Good evening. Today we'll be discussing the quantitative market workshop attended by Macquarie students and my personal experience. The Quant Pathway provides an immersive simulation guided by an expert trainer with the purpose to help students learn technical skills and better grasp potential career opportunities and paths. The quant simulation was relevant for individuals looking to potentially go into the finance industry, as the trainer explained potential jobs, problems, and solutions that may be encountered in the quantitative finance. The quant simulation let us experience the industry as we utilize mathematical equations and models provided by the coach to analyze financial markets and securities, then making predictions and managing the risk. This was done in an Excel spreadsheet whilst under the guidance of a trainer. The simulation experience was extremely comprehensive, streamlined, and relevant to real-world market-making activities thanks to the trainer. Initially began with a lecturer firstly introducing himself and providing explanations on what quantitative finance is, what potential avenues studying the subject will lead, and some specific jobs that we may be interested in. These included a quant trader, a quant researcher, he even mentioned a financial engineer. Then moved on to revisiting fundamental aspects of quantitative finance that we may have learned in university, such as simple returns, log returns, standard deviation, and volatility, explaining this will be necessary to remember for the Excel simulations. Following the lecture, we moved on to a simulation where we had a 30-minute time limit to complete 2 tasks. Task 1 was labelled Returns and Equally Weighted Portfolio, which involved us using formulas from the previous lecture, specifically the LN formula, to calculate the returns of 10 different companies over the span of a year. And the second step was using the average Excel function to calculate the mean of each stock and then identifying the 3 stocks with the highest average return over a year, ensuring everything is weighted equally. Then we got the portfolio value. Task 2 was called Calculating Portfolio Returns and Standard Deviation. Using the average returns of 3 stocks, we had to use the Excel function matrix multiplication and transpose to find the portfolio return. Then using the same functions in a more complex formation, we can calculate the portfolio variance utilizing the variance-covariance matrix. Finally, we square root the variance to find the standard deviation, completing task 2 and ending the simulation. The task completed within the simulation has real-world application as it forms the basis of creating a successful investment portfolio, using maths and models to analyze stocks, manage risk, and timing trades for the most favorable outcome. By learning and implementing skills such as calculating returns, average returns, standard deviation in Excel within a constrained time limit, it replicates the pressure of having to use quantitative analysis and mathematical models to identify and capitalize on trading opportunities. The tasks encouraged me to think critically as it made me recall knowledge from previous units, what was mentioned in the lecture, and how to apply this information following the steps outlined by the task to complete the simulation in Excel. The simulation instructions were detailed and concise, allowing me to analyze the market data and calculate a year's worth of returns of 10 different firms immediately. This allowed me to recognize certain trends within the allotted time and pick out the 3 stocks with the highest average return to form the most valuable portfolio with equal weights. Furthermore, navigating the portfolio variance was a more difficult of the 2 tasks. I rarely used mmult and the transpose functions, making it a hard problem to solve. The steps given indicated that a specific combination of these functions had to be used to solve the portfolio return and variance. After evaluating my options and recalling the previous lecture and factoring in the time limit, the solution I chose was trial and error. Continue trying numerous combinations of the functions in the covariance variance matrix. Luckily, I calculated the right answer fairly quickly, enabling me to finish the simulation before the time ran out. Calculating the returns and average returns from task 1 was less complex, feeling like it was less of a problem to solve as task 2. Once I read the steps, established what the problem was, and decided what was necessary to complete each step, calculating the outcomes were straightforward and simple within Excel. Evidently, work readiness is paramount when faced with an unknown task that could ask you to complete a variety of assignments. Adaptability was critical during the simulation, as the assessment outlined the tasks were to be completed in Python, Therefore, when preparing, I watched the Amplified Python tutorials and other such videos. However, it turned out the problems needed to be solved in Excel, making most of my study redundant for the exam, forcing me to adapt and not rely on my prior preparations. This forced me to think critically when analysing the questions and how I should apply the lecture from the trainer to solve each problem within the allotted time frame, ultimately recalling key formulas and Excel functions. Although during the exam there was no collaboration with other students to complete the assessment, the trainer's guidance played a substantial role in assisting my completion. My overall experience with Amplify Me was very positive. The trainer and the lecture he provided us with had a substantial role with the smooth completion of the Excel task, with full marks and within the time limit. Furthermore, I found it very insightful and interesting when he explained potential jobs and pathways studying quantitative finance can lead. I found my strengths were my ability to follow instructions accurately, find solutions when I get stuck, as well as listen and immediately implement information. For example, the formulas of the lecture. I realized quickly my major weakness was how substantial my lack of knowledge was when it came to potential opportunities and pathways within this industry, such as financial engineer or quant researcher. Moreover, although eventually solving the problems I was stuck on, my method to find a solution was likely suboptimal, choosing a trial and error approach, potentially wasting time and running the risk of never finding the correct answer within the time frame. The Amplify simulation has real-life application in fields such as finance and investment, data analysis, and modeling, but depend on mathematical and statistical models. The experience replicates scenarios where we have to analyze markets, price securities, identify patterns and trends. Say if we are a quant analyst, we would be expected to use maths and statistics to make investment decisions, find opportunities in market trends, and manage the risk of portfolios. The simulation closely imitates these situations, requiring us to calculate stock returns, average returns, and construct a free stock portfolio that maximizes returns. Similarly, in Task 2 of a simulation, we were expected to determine the variance, standard deviation, and the return of a portfolio. To conclude, I think the simulation was an overall positive experience. The two tasks of calculating returns and standard deviation to make a free stock portfolio with a time constraint reflected real-world activities. It also assisted in skill development, enhancing my analytical skills, problem solving, and work readiness. However, through completing the simulation, it did distinguish what my strengths and weaknesses are and how I will develop them for the future. Thank you for attending my presentation.